Markets in the third quarter have again been interesting. 2023 has been a very interesting year for investing. Much of what we've seen in the third quarter has been slightly lower volatility, but it's been maybe a moderation from what we saw in Q1 and Q2, which was very much this parabolic rise of AI and tech stocks. You saw a little bit of that euphoria coming off in the third quarter. What you started to see was a little bit more positivity coming back into the rest of the market. If you look at the US S&P 500, you started to see companies that weren't involved in tech, that weren't involved in AI, more like banking, more like industrials, more traditional sectors doing very well. So that positivity that you saw in Q1 and Q2 was spreading out, was broadening out. So you saw investments that maybe weren't tech focused starting to do well again. And that was really good for a diversified portfolio like TAM, is because we were able to see some of those investments that weren't involved in tech starting to rally. As you move through the quarter into the back end of the quarter, that's when it started to get really very interesting, because we're right in this phase of inflation, and inflation coming down to around the 3% mark. And everybody's been watching this inflection point, because the debate is now turning to whether we can get from 3% to 2%, which is the global central bank's target. And we've started to see that coming to the fore in September time, so in the back end of the third quarter. And you started to see that coinciding with the rally in oil. So oil has started to come back again. And oil, obviously a rallying oil market, is in inflationary pressure. So you started to see a lot of fears emerging about inflation not coming down in line with expectations. Therefore, interest rates are going to stay higher. So you started to see those old animal fears around higher for longer coming to the fore. Obviously, that means that higher rates, greater chance of recession. So you've started to see a little bit of concern around the R word coming back, especially in the US, that continues to remain very strong. Europe and the UK have remained a little bit more lackluster, and you started to see the gains, especially in Europe, come off a little bit. But again, the positivity around rates coming down in Europe is a little bit more anchored, as you've seen that European Central Bank approaching the end of their rate hiking cycle. So you started to see different central banks in different parts of the world, especially developed markets, starting to deviate a little bit. And we're really starting to see that in Q3. It sets us up for a very interesting start of Q4 and the back end of the year.